Good morning, traders. How we doing out there? Are you guys excited as I am to get into the week? Let's go ahead. We got a great day. We're going to talk about Elon Musk going shopping on Twitter. We'll talk a little bit about that. We're going to get into, of course, Tesla's deliveries. We'll talk about Starbucks. We got Tim Quast from Market Structure Edge. Get ready, guys. We got an action-packed show. Hit the like button, and let's go. Pre-market prep.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
How we doing, traders? Let's go ahead. Let's get it started. Let's bring on the guys here, Dennis, Dick, and Joel Elconin. Good morning, guys. How we doing?
Doing great, Mitch. Not a bad day in the markets too. S&P's up 8 1/4 at 45.47.50. Big levels all around. Crude up $1.23, 10050, back in triple digits. Gold up 10.70 at 10.35 even. Let's call it. Silver trying to get back over 25, up 26 cents at 24.91. Bitcoin down just a tad, $290 at 46,260. And Ethereum futures, they're just in the green, just by a tad here at 34.91. Triple D, just Friday. Doesn't Friday seem like just like a long time ago?
It does. I mean, I've had a pretty hectic weekend myself here. For 2 years. 2 years been hiding and fighting and trying not to get COVID, and finally succumbed to the virus. The household, the boy tested positive Friday night. So the boy's got it. The girl is now sick as well. Didn't test her, just assuming. I'm feeling okay. My wife's feeling okay. We're doing our little self-isolation here. So far, so good. Friday night was a little bit, it came in pretty hot. And, I've been worried about it because Spencer's got the asthma. My boy's got asthma. And he went into a full asthma attack about 1 o'clock in the morning from the COVID, which was scary. But we got him through that, give him the puffer, and he got through that okay, this gasping. And then, Saturday morning woke up, not too bad. And yesterday, not too bad, and today, not too bad. So if it didn't have that asthma attack, it would have been a walk in the park so far. But the asthma attack was a little scary. So far, so good. Hopefully, they continue to get better. A little bit of fever, but they seem to be doing okay.
All right, sounds like I had a little better Saturday than you did then.
Yeah, what'd you do?
Well, the Derby's coming up.
Oh yeah.
The Kentucky Derby. So Nick Malucci in the chat put a bug in my ear about the Derby preps, right? There's certain races that lead up to the Derby. You should know this by now, Dennis. I've been talking about it for 20 years. And so you watch these races to determine who's going to be in the Derby and then, who your horses are. And I usually just observe them. I don't follow all the different races and everything, but I have my Twin Spires account, and I looked in it, and I guess I must have hid some money in the Belmont because there was a little chunk of change in there. And I'm like, okay, got a little bit of the house's money.
Work.
Yeah, and I did something that I probably haven't done in 25, 30 years.
What'd you do?
What's that?
Cashed in 3 straight races.
Yeah.
Yeah. Yep. The first race, I hit a perfecta.
Look at
this.
Yeah, and then in the this is just logic. This is just logic, okay? In the Florida Derby, there was a horse that beat all the other horses in the race, right? And he was at 6 to 1, and all these other horses were at 2 to 3 to 1. So I'm like, okay,
I'll take him. I like that.
Yeah,
put it in my pocket.
Yep. And then so I'm screaming and yelling. Lisa's like, "You only do this during the Triple Crown races." And then I said, "Hey, I'm hot." So then I went into the Arkansas Derby, and a filly was the favorite. I didn't think she could hold up, and there was another long shot in there. So I went with the
Holy, you're
yeah.
hot. You're hot.
Yeah, so I'm like on Sunday, I'm like looking at it. I'm like, no way, man, I'm not gonna. And then I'm looking at these $10,000 claimers. I'm like, nah, I'm not gonna bet these pigs. But anyways, a little bit. We'll see. We'll see.
And the hotness continues for you, Joel, because you come in and your Twitter position is up 25%. Only up 20 now.
A very small. I sold not the whole thing. Not the whole thing. I disclosed I sold that around 55. But what do you guys think about this? Up 780. This is the topic of the day, huh?
Oh yeah.
All right, let's talk a little bit about that. So Elon Musk,
give us the details.
Bought 73,486,938 shares in Twitter with the sole voting power, according to the SEC filing. The stake is worth $2.89 billion. Wow. Considering Twitter's last closing price of $39.31, you guys are seeing a huge pop on this. And also we got Tesla deliveries, but let's talk a little bit here about Twitter and how this could affect not only Twitter today, but other social media stocks.
This is so interesting. And I mean, the knee-jerk reaction, you know me, would be to sell the rip. Doug Cast's tweeting out that he shorted at $49.50 on this rip here this morning. It looks like a good trade for Doug Cast, already down here, $47.25. That's the knee-jerk reaction. That's what I would think to do. But when you really stop and think about it, I don't think it's going back to $39.31 anytime soon. And there's a couple reasons for this. Obviously, Musk, I don't know if anybody in the chat knows. We kind of did some research. I don't think he's really bought any other public companies. So we know he's had almost all of his money in Tesla. We know he sold a pile of Tesla, so that money's got to go into something. So I mean, he tweets a lot, so I guess he's just kind of going to where, you know, what he uses, and he bought a huge stake in this. But you think about, you know, I don't think you could have a better person involved with your company than Elon Musk, the guy of all, you know, ideas. I mean, maybe he pitches a few ideas to Twitter and maybe they listen because he's a big shareholder now. So I don't think it's a bad thing to have Elon Musk taking a huge stake in your company.
No, it isn't. And I mean, Twitter's not the only one being affected by this today. I saw DWAC down big.
Well, that makes sense too.
Yeah.
Because you are like, okay, we got the Trump media. Now all of a sudden, if Musk is going to get involved with Twitter, that's direct competition with somebody really smart involved. So we don't know how active he's going to be. It's a passive stake right now in Twitter. So obviously it's all just speculation. This just got disclosed a couple hours ago here. So, but I've been thinking about it, you know, a little bit. DWAC down makes sense to me. I don't know with Pinterest. Initially they got a pop, and show the charts here, Mitch. Pinterest got an initial pop in sympathy here, as well as Snapchat initial pop, and they're still up, but they're starting to leak here a little bit because obviously this is Twitter company specific news. It's not like, oh, social media, they were reporting good numbers, so maybe Snap and Pinterest are going to be reporting good numbers too. This is very company specific, and it's competition with really somebody really smart at the helm. So I'm not sure you're going to see huge sympathy move in Snap, Pinterest here, as you normally would if Twitter was coming out with good news, because it's so company specific. Joel, you're a shareholder here in Twitter. What are your thoughts?
I mean, it's always the reason I was just sick of the company, sick of the performance, sick of just not growing the revenue, just with the user base. They are around before everybody. And, you know, we always talked about them figuring out, and like they never really figured out. They made that run like to 85 or whatever. But you just think about the engagement and, you know, the usefulness, you know, a platform. Of course, people can argue, you know, different ways against it, but it just seems like it. I mean, it IPO'd what 40, went to 44 the first day. You know, it's gone absolutely nowhere. And look at what some of these other tech stocks done. So I think it's a good, you know, a brilliant move for him. I don't. This was telegraphed a little bit too. If you go back and look at some of his tweets, am I buying it here or rebuying it here? No.
Yeah, but you have a little position still, though, correct?
Yeah. Just
you're holding your little position.
Yeah, if it got back up to like 55, I would let it go, like on this pop. But that doesn't look like where
Starting
it's
to
gonna
leak already.
happen.
Put up
Yeah,
the
it's
chart.
already looking.
A good monthly level standing out to me on the 47.79. That was the resistance before we did that big breakout above 50. So
When stocks make a move like this, I totally like my technical analysis really kind of, it
It's
really,
hard. It's fundamentals
yeah.
trump technicals here. Let me
Yeah,
say
see,
all the time.
what am I gonna do? Am I gonna wait for this to come back to 40? I mean, if it gets back to 40, I'll be like, I don't think it
I'd be a
is.
buyer if it got back down to
Yeah,
40. I
I
mean,
don't
it
think
just
it's going
fades it
to.
all down. And I
Nope.
don't think that's I think you're gonna find buyers at 45, to be honest. I think it could pull in here a little bit, but if you go look, and I'll try to grab some technicals for you. End of December, we really struggled at 45, and I just wonder, we get up and we pull back, we don't find some buyers in that whole 45 area, which would be about a 50% retracement of this overall move today. So I'm just looking today's move. We got up just over $50. Pull that 45 area. I think there'll be some institutional investors that are like, I kind of like Musk involved in this company now, and it may change their opinion towards it. So, Doug Cass, congrats. You're shorting it. You said at 49.5. You can already bring it in here at 47. I don't know if I would be just sticking around holding this thing thinking it's giving it all back, though, because I don't think it's going to give it all back.
What's a short interest in this? Do we know?
I don't
mean,
think it's high.
It's not that high.
I don't
See,
know.
like Dennis,
I'll take a look.
you're
Let me see
coming
if I
up with
find
that
it.
45. To me, this fundamentally changes like the way people are looking at the company.
I think so.
So the whatever small percentage of people that are short it, whatever the short interest is, they got to come up with a game plan here. They either need to lay out some more shorts, and try and
That takes
average up.
guts.
Well, right, exactly. Or they just need to eat a huge loss, right? Which they may be doing. Like, hey, I was wrong. They were waiting for the end of the world, waiting for this thing to go back to $25. And now the fundamentalists that like, oh, this is big. He's getting involved. This is a trade. We're gonna pick this up at 45, and then he's going to tweet again. He's going to buy another
That's it.
5% stake, and then it's going to go up another $6-7. And they're like, they don't care about the gap. They don't care. They're just like, they're in it for, I guess I could call it an institutional swing trade or a 3 to 6 months horizon. But if they really start growing revenues, if they could get, it was always struggled with $1 billion, right? What if they go to 1.5 or 2 or 2.2, 3, just really explode? Then all of a sudden you'll have a whole different case for the company. But
Musk involved in your company is a good thing. He's not involved directly in a lot of companies. And again, this is a passive stake. It's not an active stake. He's not becoming an activist here, but he could pitch him some ideas. Yet. And he could pitch him some ideas. I'm interested in a pullback in this thing. I'm not paying up at $46. You got to let the dust settle. Let the profit takers take their profits. It's coming in already. I mean, you're paying 50 this morning. You're on the wrong side of the trade. It's 46. But like I was saying, maybe under 45, you get that 45 maybe bounce, maybe nibble a little bit. I'm not shorting it here. Not at 46, and we've come 3 points off the highs already. Because I do think this is, I do think this could, turn at least some institutionals' opinions towards this company around, and maybe some analysts as well.
Triple D, I'll do your technical. This is what I'm looking right instead of left here. You don't get involved today, right? You see how it trades, and then it makes 3, 4. Let's say it just doesn't crater. Makes lows 44.5, 45. 43.87, and then it just kind of sits for a couple days, right? And moves up to like 45.5, and you're like, okay, you know what? Maybe the people that want to take profits off this are out. You take a stab at 45.5, 46. You have an out because you're not going to write, like if it just goes away and he doesn't do anything for a while, let it come off the radar a little bit. So, I mean, let's wait for the setup today just to hop in and say, yeah, I got to own this at 47.
Chase it, man. Yeah, I wouldn't chase either. I mean, you're paying up 20% for something. I wouldn't chase it, but I think there'll be some money managers that'll change their opinion on this thing. So as it comes in, more and more, it starts to become more attractive. I don't think you're getting back to 40 anytime soon.
I like your levels, guys.
One more. Just let me say, Jim Morgan says right puts at 45. man, you're right. These puts now, they're already getting whacked. You know what I mean? You gotta.
You mean the premiums coming down already just from the coming in here? No, I don't mind that. You're right in the puts. I don't mind that
The
idea at all.
45 put now. I mean,
Well, it's the premiums can be jacked up a little bit, I would think. You got the 45. You've got all volatility picked up a little bit there.
a little bit, but the price increase. I mean, I guess it would have been always, you kind of like to write the puts on like that.
Well, yeah, obviously, if we write the 45 puts, we're sure we
Last
love to do
week.
that before we knew the news, Joel. We're after the news, though, so unless you're an insider, a buddy with Elon Musk, and he was telling
There's probably a few of
there's no
those
way to
out
know that
there.
ahead of time. So we might take the
Elon's
information we
brother.
have now and go. I don't mind that idea. I don't mind that idea.
We'll take a look, definitely. So 50% retracing goes to 45.30s, 61.8 goes to 43.95, just to give you guys exacts.
Fib master over there. Wouldn't
you
change
guys.
your name from Money Mitch to Fibby Mitch.
I don't give them often because I feel like it confuses
Fitch.
people, but hey,
Fitch.
I do take
For
a look
sure.
at it. Let's go ahead. Let's just pivot a little bit away from Twitter, but still Elon Musk. Let's go Twitter. Let's go Tesla here.
Yeah,
Tesla's
sure, go.
deliveries, 310,048 vehicles in Q1 2022. And he said it. They struggled during the quarter to get the supply chain concerns filled, but they were able to meet and beat the expectation here. I didn't think they really were going to get to these numbers. I thought they were going to suffer and kind of finally be talking about the supply chains, but Tesla does it again, right?
Yeah, looking back, but looking forward here, it's going to get tougher because, again, Tesla is a big ticket item. And yeah, I know they've got a huge share and we're going EV, and maybe it's going to be more demand because of the gas prices. But still, at the same time, I think the economy is going to be I think the average person will be a little stretched here for the next while. I don't think it's going to be as soft of a landing as the Fed would like. And I just don't want to buy companies right now with big ticket stuff like that are selling big ticket stuff. I own a little bit of Ford. I own a little bit of GM. And they're honestly not performing for that reason. So there is no reason to just jump in here, I think, and say I got to own Tesla here now. I think it's making all-time highs. I don't want to own stuff that's big ticket right now. So sorry, I'm kind of poo-pooing Tesla here, which I always do, but I'm struggling to find a bull case here.
Yeah, story-wise for me, I think that this recent run in Tesla might actually bring more attention to the other EV players than Tesla itself. Because I feel like Tesla is getting to that point where it's extended, and I think that you're starting to see some
really extended
go towards the other EV names because of that last run, though. I do think that you're starting to see some interest going into Ford, GM, Fisker.
I don't want to buy any more Ford right now. I don't want to buy any more GM right now. I don't want to buy anything big ticket right now. Think about necessities. Think about stuff that people aren't going to give up. Apple makes sense, but Apple's valuation's too high. I'm still concerned that this isn't going to be as soft of a landing as maybe the market is giving it. We've rallied a long ways back here. We've had a lot of stocks bounce back. I think if I'm looking at stocks 6 months from now, I think stocks are lower. So that's why I still sit with a hoard of cash. And I might be wrong. Obviously I've been wrong the last few weeks with this rally, but I think there's a lot of a squeeze. I think this is a lot of hope here that, the Fed's going to be able to navigate this, but the inflation is tough. The rates are coming up. I mean, everything, the writing's on the wall. And then you look at the home builders and you do look at the automotives and you look at RH and Williams-Sonoma. I mean, breaking down and making new lows, and you're thinking people aren't going to buy expensive stuff right now. And it's not that they don't want to, it's that they're not going to be able to afford to.
Yeah, I think this actually pivots into our third topic here on Starbucks because it could be playing into what's going on here. Let's talk a little bit about Starbucks here.
I just for the Tesla traders out there.
Yeah, let's put some.
I'm giving you my technical setup last week on this. So
do you still have Tesla, Joel?
Very small, yes.
Okay,
yes, it's very small.
Let's let us know
I'd
that.
love to say, but full disclosure, very small piece. But if you don't know my technical setup there in Tesla, then you haven't been paying attention on the show for the last week. So, all right, where do you want to pivot to from here?
No worries. We're gonna go to Starbucks. But what was the level? Just to give us one
give us a
level.
level.
No, I'm not giving it out anymore.
Oh, he said you got to look at the old shows.
Yeah, they got to go back and listen to the old shows. I can't say something 100 times in a row and everyone not listen.
That's mean. All
Guys,
right.
just
All
check
right,
out
all right.
check
All
out
right,
the
all
other
right, all
levels.
right.
You guys
Go
got
to
to be
Starbucks.
watching pre-market prep. Joel's giving you the good stuff. All right, let's go ahead. Let's transition to Starbucks here.
Sure.
Starbucks board. So pretty much, it's been a little bit of a battle since they changed on over. Their CEO said that he was retiring today on the 4th. The replacement here to retake SCHULTZ here. So what happened is the founder's coming back to the company, right? He wants to go ahead and try to innovate, make the new Starbucks, as he's calling it. So let's go ahead and hear Starbucks boards decides to retake SCHULTZ after Kevin Johnson said that he would retire from the position on effective April 4th. SCHULTZ announced a temporary halt to the company's share buyback program so the money can be invested in the company's operations, employees, and the stores to create more long-term value for shareholders. Here you guys have
What is this about the
Starbucks.
buyback, though?
So essentially, he's trying to use the money to be invested back into the company's operations. It could go to employees, or it could go to creating more long-term value for shareholders.
He thinks it's better off with better off using that way.
Using the capital.
That's the right thing to say. When you're killing a buyback, that's definitely the right thing to say. I think the market's going to read more into it, though, and I think the market is reading more into it that you don't like to see ever a buyback get halted because you start thinking the company's conserving cash for other reasons. And that means that they might not like what they're seeing going forward. So I think that's like immediate knee-jerk reaction is that's what you're seeing here this morning. I'm not going to argue with the knee-jerk reaction here too, because buyback equals you cancel a buyback, it equals sell. As much as you increase a buyback, it equals buy. You cancel a buyback, it equals sell. The algos are just going to do that. Even if though he says the right things here, I'm still skeptical that there isn't maybe something else that he's not liking, and he's conserving a little bit more cash. So for that reason, I won't buy a stock.
Yeah, I'm gonna go fundamental here. We'll talk about the technicals. Fundamentally, the eyeball test on this for me, when I leave the gym and I come home, one way I go home, there's 2 Starbucks. Okay, 2 brand new Starbucks. All right.
Yeah.
One of them is like, and I'm talking like, like a normal time, it's closed because they don't have employees.
I don't understand that, but
no, because they don't. I mean, different hours. And then the other one that I go by, which is only like 2 miles down the road. I mean, like you need to have a Starbucks, like 2 brand new spaces.
Have you not seen the Simpsons episode where
the
Simpsons episode in the mall? And there's a Starbucks, and then he walks a little farther, and there's another Starbucks, and then he walks another farther, and then he goes into a store, and he's like, you got to hurry up because we're selling this place and turn it into a Starbucks. Then as they're leaving the mall, it's just all Starbucks. The whole mall is just different Starbucks.
There you go.
I mean, Toronto's the same thing. And Toronto, I'm not sure if it's still that way, but this one corner that's of the 4 corners, there's 3 Starbucks. On 4 corners, there's 3 Starbucks, and on 4 corners, almost 4 corners. So the Starbucks are everywhere. There's no doubt. Do they cannibalize each other to a certain extent? Probably. But I mean, it's worked for a long, long time. It is an expensive coffee shop, though. And
there you go. No, there's another thing, Dennis. Big ticket items. People are not going to be buying big ticket items.
There we
Maybe
go.
you want to go drink your McDonald's coffee.
No,
you want to go drink your Tim Hortons coffee.
I'll tell you what coffee
Starbucks
you're drinking.
is double the price.
Bros, I know. Here comes the bros, bro.
Baby.
How much is that, though, Mitch? How much is that?
Look at that.
Coffee drinkers out there.
I'll tell you what I had this weekend. I had the 911 from Bros. If you take a look at that chart, I'm also going to talk about some levels. Let's put up Bros really quickly. It has a nice retracement from that last little pop that you saw to 65, holding the 61.8 here near that 57 mark. Going to watch today on Bros to see what happens. But I will tell you, I got the 911. The 911 is 9 shots of espresso and a little bit of Irish blend because you need a little bit of Irish creamer when you get
9?
9 shots of espresso.
Holy.
My hair would be standing up on it.
Oh yeah, I wouldn't sleep for 2 weeks.
That's called the 911, baby.
Holy
Well, when I go into those places, I ask for when the rare times I do, I think it's called like a red eye or something, and you ask for 2 or 3 shots of espresso, and they're like $1.50 or something like that. And then you go, "Oh, could you put a little coffee in there for me?" And then they put a little coffee in there. But it's easier at Panera because you don't even need to ask for the coffee. You just get the couple shots of espresso, and then you just go over. When they're not
You
looking,
fill your own coffee.
you fill your own coffee
for
up.
Panera.
Yeah.
like he's 12.
So another thing with the story in Bros is not necessarily just Bros, but I think overall Starbucks has gotten to an age in their branding where it's considered an old brand. And when brands get to that point, if they don't innovate and stay at top of class where the new generation wants Starbucks, I think this is where they're struggling. It's the new generation. It's not the generation that saw Starbucks go from, the corner shop to the big massive brand that it is now. I think what you're really starting to see is a brand that's getting to the point where it's starting to get old and it's viewed, like I would say, like it's old coffee. It's just an old
and
brand.
Maybe Schultz
that
is trying to fix that. Maybe that's why he wants to keep the money and not do the buyback. He's trying to fix it in different ways.
How happy is he that he has to come back to the company? How happy do you think he is he has to come back?
It's not.
Well,
I mean, this is anything, but he must think he can run it better than what's being run here.
That's what he does think.
I mean, well, so much for running for president, right? But anyways, you want good coffee? Costco has that Colombian. It's cheap. Man, you can make it strong. So that's my coffee.
I think we're all a consensus opinion here. We're not buying the Starbucks dip.
No,
all right.
no.
All right. And the chat doesn't give Starbucks a lot of love either. Not a lot of love from the chat.
Not a lot of love out there.
Just before we move on,
so that'll probably rally now.
I knew. Yeah, exactly. A note here from Jude, and he said he's going to be a financial advisor in a couple months. And he said he just wanted to thank us that we've helped him so much.
Nice.
That's what it's all about.
Yeah, that's good, man.
Yeah, we like that.
Jude in the chat. So good to hear, Jude.
Thanks,
I'm glad. Good luck on that.
Yeah, one thing we do definitely, and I think Joel and Dennis do very well, is try to pay it forward, right? And try to give your experience, some of your knowledge, to pay it forward for those that come after us. So
that's what the show is all about. Yeah, we're all about teaching. We try to teach on this show. We give some trading ideas. We have some fun. We talk some stocks, but we're always trying to teach to a certain extent. Obviously, we can't jump into stuff into detail because we're still moving the show along. That's why we do the educational segments, and that's why we've done some extended educational segments on PreMarketPrep.com. But for the most part, this is what this show was designed to do: is trying to make traders, teaching you as opposed to just giving you our opinions on stocks.
All right, so
let's give some opinions on some stuff.
No, I got one here that I want to talk about that actually happened to me. Let's go on my little rant before we get Tim Quast on market structure. I'm gonna actually skip down to the airlines here. The airlines canceled more than 9,000 US. 9,000 US flights were delayed over the weekend. I can tell you, I was actually a part of it. My fiance, for first time ever in my life, someone near to me or around me gets a canceled flight. She was sitting in Denver International Airport for hours and hours. Spirit Airlines. I would give you the big finger in between these fingers right now, but I'm not going to do it on the air. I would tell you that just cancel flights. If you know that you don't have the ability to make it to the destination, just cancel. But no, they delayed.
That's what they do. The delay, cancel,
and then cancel.
That's how they do it. I know. It's brutal. I've had that happen to me a couple of times before, where you delayed, flights delayed, and then 5 hours later, no, it's canceled.
So the hardest hit was actually Southwest Airlines, so pay attention to them today. We'll see if it affects their airlines or not, but they were hit the most. They also had a back-end technical problem, so that's why I want to note Southwest here. With their technical problem, that could add to the sell-off there. We'll see if this does sell off. As you guys see in pre-market, not much going on right now, but
This
see if these airlines can
airlines
move.
have rallied something fierce, man. I don't get it, but there has been, a V bottom in most of these airlines here. And if anything is overbought and not deserving of it, I think it's the airlines. I do get, we got a reopening trade going on. I do get, when I'm, my family's getting COVID, I was like, oh, maybe we should go on vacation after this because we don't get COVID. You don't have to worry about it as much. So I get that aspect of it. But the margins are getting squeezed because they all don't do hedging, with the oil prices higher. And I do think it's not going to be as soft of a landing for the overall economy. And that means it's not going to be as soft of a landing for these airlines, pun intended there. So I think I'd sell the airlines in this sort of strength that we've seen. And LUV, AAL, DAL, I pair trade those things all together. They all move together. Jets, if you just want to look at them all. We've come back substantially in the last couple of weeks, and I believe this rally is a gift.
Yeah. One thing that stands out to me on those charts is that little shadow area right below it. Nice little room to drop down there. So I'm going to be watching that room.
The gaps.
Yep. Look at the gaps there on AAL.
What was the reason for that? What went on that day? Oh, that was just a crazy rally day when the war was over. That's
exactly.
Right.
There you go.
Yeah,
Give me a little space to short into. I'll take a look.
Yeah, and the other thing too about the setups here with any of these charts, if you do short, you have like you look at above 40 here in DAL. They're not moving too much off this. I mean, I heard it was mostly weather related more than they're just figuring out.
This is normal business, man,
Yeah,
for them. The cancel flights and the delayed flights, like this is common occurrence, especially since, probably in the last couple of years with all the stuff that's happened with COVID and everything. I don't think this is anything like out of the ordinary for them.
Yeah, the airlines aren't here to work for us. They're just here to make money, man.
We got a trip to Oregon planned, and these airlines, what they're trying to do is they're just trying to maximize the amount of, like, they have changed our flight on the way back so many times. Lisa's like, you know what? I'm not even going to try and adjust this one because I know they're going to try and change it again. So they're just trying to, if they can get 6 more people on, one flight, or they can reduce.
Let's delay it 2 hours to get the 6 more
just
people.
Squeezing. And also longer term. If they know people from Michigan are going to Oregon and, back and forth, I think they're just trying to squeeze every dollar out of it. And then when something goes wrong, then everything goes,
Pure example, the plane that was supposed to take my fiance to Fort Lauderdale ended up flying to Vegas because why? Smaller distance, smaller oil price, and they probably still got the same amount of money, right? There you go. Algo told them, nope, you're going to Vegas. You're not going to Fort Lauderdale.
And people to pick up there.
There you go. All right, let's go ahead. Let's get into Quast still hasn't joined us here. I'm going to check on him. He should be joining up in about a minute or two. We'll be getting to Tim Quast. Let's go to another story here. Wanted to save this one, but let's just jump right into it. Let's go to GGPI. I'm going to scroll up here towards Tesla because it's related to the EVs. Let's get into that. So today, headline. Polestar and Hertz announcing news here. So HTZ and GGPI are the ticker. The Swedish premium electric performance car maker announced a new global partnership that includes purchasing for up to 65,000 electric vehicles over 5 years. The ability expected to begin in spring 2022. And late 2022, it would be coming its way to North America. In spring 2022, it would be in Europe. And Hertz, this builds on Hertz announcements last October to offer its customer the largest EV rental fleet in North America and one of the largest in the world. So, of course, today, Hertz and GGPI moving on this. Full disclosure, not in it anymore. Had it on Wednesday, sold it on Thursday. There you guys have it.
Isn't that the way it works? Right before. You always sell it right before.
Full disclosure, I missed out.
That's how it works. That's how it works. The big move happens 2 days after you sell it. I told you my Heinz story from years ago. Had it for 9 years. And I was like, I'm moving on to bigger and better things. And then Warren Buffett took it private, like literally a week later. 9 years, week later, it takes private and stock goes up like 45%. I was like, are you kidding me? Anyways, maybe selective perception, but that's so
like this is.
Does Polestar making cars already?
Yeah. Yeah,
So
I mean, they make
are.
cars already. They have vehicles that
All
are.
right, so they are making
So they make
cars.
one car, and that
Well,
one
I think they
car
make more than one car. I
they're
don't
going
know.
to
I
sell
hope they make more.
65,000 to Hertz, and it's going to get there in like 2 or 3 years. Okay. Oh boy, you can tell how bullish I am that stock. All right.
Yeah,
What Triple
that's
D, did he just fall off the radar there?
his camera got off. I don't know if he had
Okay.
to get out there for a second, but
Okay.
let's get him
You
back
can
on.
see the pre-market pop on this one, so it's already
Nice.
started to fade. So you can pick your intermediate level in between there, but that pre-market high looks pretty safe there.
I had
In
COVID
fact,
invaders. That's why I took them thing
oh,
off.
COVID
that's
invaders.
COVID invaders.
Yeah,
They're
you,
trying to
you,
give me
you don't
COVID.
want them getting the chat sick, you know. I
No, I
appreciate
know.
you, Dennis.
Oh, and it's so ridiculous. Like, yesterday they're like having COVID cough wars. So they're both sick, and then they're like jumping out from around the corner and coughing on each other just to like. I'm
Kids
like,
will
hey,
be kids.
I don't have COVID yet. Can you keep the coughs inside? You don't need to if you're coughing, it's one thing. If you're intentionally coughing, that's a whole other thing.
Well, I'll
Anyway.
tell you what, Dennis. You know what time it is? It's time for Market Structure Mondays. All right, bringing on Tim Quast here. Welcome to the show, my friend. Glad to have you back on, and good to be with you. Welcome to the show.
Good to be with you. Good to see you.
All
Tim,
right.
how are you?
I better bring some energy, I guess. I'm well, thank you.
Good.
How about you guys?
Yeah, you're
What have
dealing
I
with Mitch
missed?
here. I drink my coffee in the morning. What can I say?
Well, you missed Twitter. You
Good
missed
for you.
Twitter.
Me
What a
too.
move here. Let's do a talk market structure here on Twitter and see if there was any preemptive, look into something like this. How is it looking ahead? Because obviously Musk took a big stake here this morning. The stock is trading up 20% here, TWTR. So I want to see the market structure on Twitter.
Dun dun dun.
Do you-
You hear
do you-
Dennis.
so do you-
He wants Twitter.
So do you think he's going to buy it? Do you think he's just going to buy Twitter?
I was saying on a pullback I
right?
might, but
he
this
could,
is not a
right?
pullback.
He has the money, doesn't he?
Oh, yes, he does. It's a much bigger deal than Jeff Bezos buying the Washington Post.
Yeah.
But it's a much bigger transaction. But could he? Well, sure he could. He could, yeah. So, Dennis, to answer the question, so we would call Twitter a short-term 10.
Oh.
So when a stock is at 10 and supply is falling, you can get some very nice moves. And these dips in the supply side, for those of you new to market structure, what I'm talking about is supply and demand. And so this is price, just closing price. Then the green part is an algorithm that measures demand. When you put the various demographics together that create demand for stocks, we normalize that to a 10-point scale. So when it's at 10, it's slamming against the ceiling. That doesn't mean it won't stop rising. Then you want to look at the supply side. That's short volume. Short volume is a 2009 measure created by FINRA that reflects the percentage of trading volume in a given issuer in the market or what have you that is coming from borrowed stock. And so the downtrend in supply and the fact that demand remains very strong at 10 can lift prices. It's the kind of thing we say you should trade late in the overall broad sentiment cycle, which is exactly where we are. So could this have predicted that kind of move? Not really, Dennis, but it's not surprising given the supply-demand equation that it could move the way that it did.
Yeah, because I'm just wondering, he's probably accumulated this over time. I mean, in the open market. So you wonder if, that would pick up something like that, hey, we've got some buyers in here and it's pushing the price higher and obviously showing up in your system. So it's just interesting. Yeah. It's an interesting thought.
Probably in here, where you see created stock. And what I mean by that is, believe it or not, folks, when there's a big buyer for stock in the U.S. equity market, generally speaking, brokers are going to create it. They're going to create currency for the party to consume, and then they'll have to square the books over time. So the fact that you have this period of about, call it a good 3 weeks, where there was an excess supply curve, that would have been a really good time to buy it too, because the price was down. right during options expirations. That's often a time where big institutions will use the liquidity created by derivatives to build a position. And then the fact that now for about the same period of time, the supply has been below trend, that's probably where it occurred. I can't say absolutely, but that's what the data to me would suggest. Could
All right.
Could you pick up on that? I don't know. It is the way that we think about it. If the broad market sentiment, Mitch, is 7.2 and falling, what should you trade? And traders, we're not after the Teddy Roosevelt. It's the man in the arena speech, the famous Teddy Roosevelt speech about it's not whether you're the victor, whether you succeed or fail, it's that you got into the arena and got dusted up. Well, we don't necessarily want to do that as traders, right? We do want to just win. You don't want to get all dusted up in the arena. So what do you trade late in the cycle for broad sentiment? And what I mean is this. Here's where sentiment was the last time, or back in January when the market declined, then in February where it was when the market declined, and where it is now. There's a high probability, and I said this Wednesday last week with Spencer and team, that there's a very high probability that the market goes down. And son of a gun, the very next day, the Dow goes down 550 points. What's giving it support yet is this, the big drop on the supply side. We've had two big divots in supply, and that's supporting the market. But that's not a growth kind of market for stocks. So you have to be aware of that, traders, going into it. And what would you trade? Notice that my Benzinga April 4 portfolio has very nice demand and a very constrained supply. Well, those are the conditions that you want. And there are two things that you could trade under these conditions. You could trade the Dominion Resources, the ADPs that have very stable demand and falling supply. That's a good, safe place to be. By the way, utilities is the only sector left that shows rising demand. Everything else has peaked and falling demand, meaning it's cause and effect. We're kind of late in the cycle. Or you could trade the winds of the world. Which are late stage, they're late stage 10s. These are the kind of things that can give you a little more lift. You see that? So the demand is all the way at 10, but supply has dropped sharply. Well, that could give you some gains. Just realize that we're late in the cycle. I'm thinking much more right now about not burning capital in the market. I'm content to wait. We talk about that all the time, the amount of time that the market is up or down. But that's what I'm thinking about as Market Structure Monday commences anew.
Yeah, definitely. I've been noticing the utilities getting stronger, and that was one of the names that pointed out to me, Dominion.
Yep.
So definitely going to keep that one on watch. I've been seeing that one starting to rise. A big leader in that one was SRE. I'm not sure if the supply is showing a dropping off on that one, but going to keep watch on utilities. And like you kind of mentioned, was this kind of just a big bear market rally that we're getting and we're starting coming back with kind of that supply dying off? It doesn't really show that the short interest is coming back in, but what do you see there overall?
Oh, it's such a subjective consideration, Mitch. I don't claim to know anything special about bull markets versus bear markets, or whether this is a bear market rally. There's a lot of that discussion that we're just getting the sort of bounce that you get when the market remains in a long-term sort of bear posture, a propensity to the downside. By the way, this is SRE. So yeah, Sempra has been just fabulous. If it's spent the whole time at 5 or better, that is a great stock to own, and you can just continue to own that until the demand equation deteriorates below 5. You're exactly right. That's the kind of thing to own when we don't know if it's a bear market rally or if the bull market is resuming. My opinion on this is that the momentum market ended in May last year, almost a year ago, that there are long cycles between a cause and then the effect. created by that cause. It's very much like monetary policy. There's a delay. If we lower rates, the effect, the frothy effect of that develops over time. And about the time we think everything's great, it's probably beginning to deteriorate. And when the Fed lifts rates, as we move into this cycle where we're increasing interest rates, the ramifications from that are that the United States consumer is very dependent on home equity, on the value of a home, on the capacity to refinance a home and use that capital for consumption. That's what the Fed wants. We should, again, I think you should be very clear-eyed as a participant in the US equity markets and the US economy about that relationship. It is by design. The Fed pushes rates down because the number one engine for fueling our consumption economy is home ownership and the associated consumption that comes with that feeds into Home Depot and Lowe's and all the things that we do. Well, as rates begin to rise, there will be a delayed effect from that. And it's probable that we run out of capacity to consume at the rate that we have. And so that's going to have some effect in the future. But traders, if you think about short-term supply and demand, you can take advantage of what the market gives you without being exposed to the big risks like that. You can't avoid them entirely. And I have long-term investments too. But from a trading standpoint, you sure can. That's what you want to do.
Now, one area that I did see a little bit of weakness last week was tech. And so can we return to the market highs without these kind of tech stocks leading the way?
No, of course not. We can't. It's a huge part of the market. It's a very simple answer. No, you can't. If we go look at the tech sector, 443 components, we've had a very nice stretch, really the first one of 2022, where there was excess demand above 5 and supply that was falling. Those conditions continue to exist. But no, it's not. When you consider that tech, in the tech sector, call it 26% of the market's come down a little bit. Communication services, you have to add that piece of the puzzle in. Tech that is in consumer discretionary, like Tesla. The tremendous reliance of the market on tech means that it's very difficult to have the kind of bull market that we had in 2020 to November of 2021 if tech isn't the leader. It doesn't mean we can't have good days. I don't, Dennis, you tell me, do you think there's a way for the market to resume marching higher to new highs sustainably without tech?
No. I mean, it's just too much of the index.
It's too obvious. Yeah, the big components.
I mean, you can look at the indexes and you can say that whole thing, like why, they held up better than some of the smaller caps or some of the smaller growth stuff. And I mean, it's just, you got those 5 stocks, 5-6 stocks that are S&P. Yep. I mean, 500 stocks, but it's really 5 or 6 stocks that are driving the bus all the time.
Right. Yeah. Right.
What do you have in the spy for us, Tim? You got anything? Because it's, you had the Friday move, right?
Yep.
And with everything that happened last week, you made a new low for the week on Friday, and you were thinking, well, this is, we're really going to give some back. And then you just had that late day rally. I was just wondering, because to me, there's, some pretty clear levels jumping out from Friday, and I didn't know if that would be what the SPY supply and demand looks like on your platform.
Well, so it was an unusual, yet again, to me, we've had our faces shoved into the facts of market structure in 2022. And I think it's gotten short shrift, but Friday was another great example. Well, Thursday and Friday both were good examples. The market was fine on Thursday, and then all of a sudden, the bottom dropped out of it in the last hour. And it was.
When did we have you on? Was it Wednesday?
It was Wednesday.
Because I said in the market did get quasted. Remember?
we got
that?
And I warned that it could get quasted.
You said something, and I go, well, we'll see if the market gets quasted.
What happened?
But you didn't say it was going to happen so late in the day.
Right,
is what the thing.
Right, that's the interesting thing, that these two days, Thursday and Friday, Friday the same way, except that the market was down. In fact, I was sending a note to the CFO of a public company about what was going on, and it was 5 minutes to the close, and all three broad measures were down. And I looked up, and the Dow's up 140 points. Yeah, I mean, in the last 4 minutes. So, what causes that? And I would, I'll say, new month, new money. It's one of our core principles. We tell traders, be aware of the context. And there are three big things that matter in the month. The beginning of the month, when the money that both comes and goes, required minimum distributions from retirement funds, and then new money coming in, 401k contributions. We made a big contribution, by the way, to our 401k profit sharing plan. You have to get it done by the 15th. And I hate to blow off, it's a big chunk of money that goes in. Well, we did that. So who else did it? Are there other firms running 401ks that say, well, I guess we better deploy that? And it gets deployed around reference prices. Right? That money that is trying to track the averages, it wants the closing price, the reference price, and it gets jammed into the end, and it causes these crazy moves. So I think that that's what happened. Looking at the patterns behind SPY, to answer your question, Joel, it was a very small pattern, though. Does that mean, if I compare that pattern to what we saw March 14th through the 21st around big index rebalances and quarterly options expirations, that was a big pattern. And there were big changes in hedges in certain sectors, industrials in particular, and industrials have underperformed. There was a colossal drop in the use of hedges on the 21st of March in industrials specifically. So does that mean people are hedging against the risk that the economy slows down? Could be. But here's where the data are. The data are at the top of the Ferris wheel arc. These are the data that tend to precede declines. Again, I'm not saying it's going to be sudden because we had this big drop in short volume. That's what gave the market this lift. It's the fact that there was a bunch of short covering. But that's not the thing that gives markets sustainable lift. If it begins to turn and supply continues to fall, we could see declines into April options expirations. Again, I'm not saying that's going to happen. I'm saying that there's a probability that it could occur.
One more. Well, I'm in the market for some new threads, and I like that shirt, man. I like blue. That is a nice shirt you got on there.
Australian,
Australian. Okay, I figured I can't afford that.
You see, Joe?
Okay.
He's always looking good, man.
I can't afford that stuff.
You need those imported threads, man.
Back to Joseph A. Banks if I can find one that hasn't closed in the area. Thanks, Tim.
Appreciate it, like always, Tim.
Good to see you guys.
Hey,
you bet.
We'll definitely keep up with it.
Okay.
And you guys that haven't done so before, definitely check out Market Structure Edge so you guys can get this data and understand exactly what Tim's looking at. Right? Thank you for coming on, Tim. We'll have you back.
Good to see you guys. Happy to do it. Thank you. By the way, I'm headed to the sea again. I'll be here for next
traveling, baby.
Next Market Structure Monday. I'll be here then, but we're headed to St. Martin, St. Bart's, and Anguilla, April 12th, 13th, thereabouts. So
nice.
try to get rid of the gaunt white winter appearance. So that's I'm just giving you a heads up. So, but we'll see you next Market Structure Monday.
Hey, you trade on those mountains for a little beach time. Can't blame you, Tim.
Exactly. It's mud season up there. You don't want to be up in the mountains in April.
No.
You want to be in the sea. Yes.
Have a good one, Tim. Enjoy that trip.
You guys too. See you.
What are you seeing out there, Triple D? What are you seeing? I see just a
leak.
yeah. Okay. All right. I didn't want
separation happening. You can clearly see we're getting more. We're getting more of what we saw on Friday.
Yeah.
Banks are just continuing to leak here.
What is going on with the banks? I mean, Jamie Dimon
stuff. It's telling you. And this is where we just start going down and looking under the hood. And we've been saying it here for a few days now on the show that this soft landing might not be as soft. And the market is saying that, banks are starting to get hit. You'd think banks would be going up with higher interest rates, but it's telling me that lending could slow here. It's telling me that the small business may not be doing as well, because think about your banks. There's a lot of customers, a lot of different types of customers in there. But I think you're starting to see some separation here. Tech actually, I don't, obviously nobody's got a crystal ball here, but the tech stocks are holding up fairly well. And I still say, like, people aren't giving up their iPhone if it starts to get tough, but they are going to give up some of those other big ticket purchases. Some of the banks, some of this other stuff, maybe not going out to restaurants as much. I'm kind of looking at the situation where if we do, and it's an if, but if we do go into recession, who's the winners and who's the losers? And the banks are not the winners.
One thing that definitely put on everybody's radar, Wednesday, FOMC will be releasing the minutes from March meeting. I normally don't see this as being fireworks, but we have seen them affected this year. So I'm going to be paying attention to those minutes that come out on Wednesday to kind of see where we're leading.
They're going to half. I mean, you kind of.
That's what
I looks like they're going to half.
Yeah,
at least.
Yep, that's what the Fed. Yeah, we talked to Raghi on Friday. That was a great segment. I mean,
markets come all the way back too, so
give us some
that's
room.
not scaring them either. There's every reason to go half.
I've heard mentions of 3/4 hike.
Well, I think it's getting a little bit crazy, but
I've heard it. I mean, I could point to articles all throughout the weekend that was pointing to it.
Yeah.
National Enquirer.
Well, yeah.
the Fed's looking. If the market's taking this in stride so far, maybe we.
You know what that
navigate
is,
this,
Mitch?
but
You're kind of young.
Oh,
you know what the National Enquirer is?
I don't get that magazine delivered anymore. Come on, man. Who gets magazines delivered?
When you go to the grocery store, it was right there.
All right, let's take a look at maybe some stocks from the chat really quickly. We got about 3 minutes to 9 a.m. Let me go through the chat, see what's being mentioned out there. We did see Walmart have a good day going into the close Friday. Let's take a look at that.
It's defensive. People shop more at Walmart. If you're looking to save money, you go to Walmart.
When you're
this
looking
stock
to start
benefits
saving
during a recession. This is like you're seeing this price in. I mean, it's amazing. You say the market looks forward. The market is starting to look like certain sectors are going to struggle and certain sectors are going to do well. People go to Walmart when they shop at Walmart more when they're looking to save money.
Look at Dollar General.
Walmart's a stock you own on a pullback. I think this is one that actually benefits during a recession.
Dollar Tree, Dollar General.
Mm-hmm.
Start to see those stocks. They're all making highs.
DLTR doing well. DG, that's Dollar General.
Yeah.
Big Lots. Big Lots. And there's one more.
Big Lots is Ollie. That's just Big Lots. I don't know about Big Lots. Period.
What about Ollie? Ollie Bargain Outlet Holdings.
That's an upgrade today.
OLLI.
It caught an upgrade today. So it's trading up here this morning. Who upgraded it? We got it, Mitch? Go to the pro.
I'll look it up right now. I got you.
I always thought it was Ollie's Bargain Basement. You know what? This is interesting on the dailies here. And you're not even, if this could come back, you can get this at the top of the range from Friday at the $44 area.
Up a
$1.90. Yeah.
I mean,
I don't want to draw too many lines, because it's not perfect here. But I do. I mean, just overall, the old resistance, new support. So if this comes back into 44, you got a double bottom to lean on. And what's the firm that
it's Wells Fargo upgrading the stock from equal weight to overweight and a $65 price.
65. They're going off the board on this one, Joel.
Yeah,
breakout over 45. So let's see. It's getting challenged there this morning. Let's see if it's got follow through. It's got to get up over 45. Give Joel a close over 45, then it starts to get interesting.
Yeah, it's interesting though. I like it. I mean, it fits with our
theme.
Yeah.
We're going with the theme that the consumer is going to have less discretionary income going forward. They're still going to buy food. They're still going to buy clothes. They're still going to buy, but they may not be building a brand new house. They may not be buying a brand new car.
Big ticket items.
When you're looking out 6 months to a year.
Look at Winnebago.
Now, that's something they're not going to be buying. And I never looked at the chart in a while. This is something that you absolutely sell into all rallies here, in my opinion. COVID stock. It's nothing going for it. Higher gas prices, COVID stock, no discretionary income. No WGO for me. No, thank you.
Don't have me driving around the country with these gas prices, please.
Holy mackerel! I don't think you'd be. That's one you do not want in the portfolio. I don't think.
Yeah.
Maybe we're wrong if gas prices start to come down. I mean, there is a scenario where they soft land this thing, gas prices come in, inflation gets in check, and we all go back, and there's no recession and all this other stuff. But right now the market is playing defense, and they're selling stocks like Winnebago, and they're buying stocks like Walmart.
And on that note, I'm going to end. I'm going to go have the Brentster on, and we're going to cover what's coming up this week. So great job today, Mitch. And we'll have to
When's
decide.
Spencer back, by the way?
I don't know. We'll decide.
We might just keep Mitch.
He needed a hangover Monday to get
That's
through
not what it
Tuesday.
is.
You know what I mean? I can't blame the man. He went to Vegas. He needed a hangover Monday. Hopefully he's getting some good electrolytes, some Pedialyte in him today.
Gatorade.
So, no, you got to go stronger. You got to go Pedialyte. The Gatorade doesn't do it anymore, Dennis. It's the Pedialyte. You go straight to electrolytes.
Pedialyte. I should get my kids for the COVID Pedialyte.
There you go.
I would feed them Gatorade. Pedialyte.
Hey, they have the Gatorade one now that tastes a little bit better than that old stuff that we used to be forced to drink, But let's go ahead. We'll wrap on up. Dennis, you have a great week. Kill it like always. Baby shark, any day. All right. That's going to do it for us right here on Benzinga. Get ready, guys. Up next, you guys got live trading with Zunaid, Ryan, and I. I'm getting ready to trade this market. Are you getting ready? Come join us. You don't got to go anywhere. Stick right here on Benzinga. We'll get you guys over to live trading action. And like always, guys, check out the FinTwin conference. If you guys look at the description below, you guys should be able to find a link to the FinTwin conference. If not, just go to our events website and find that conference, because guess what? This is where all the traders that you guys follow on Twitter are going to be. Don't miss out this event. That's going to be happening just in May. So, hey, stick around, guys. That's going to be in Vegas. And who knows? Spencer is probably just going to stay there. Just tell him to stay in Vegas. He's going to FinTwit conference. All right, guys. We'll see you next time. Up next, you guys got live trading with Junaid, Ryan, and I. Don't go anywhere. And later today, I will be releasing the Hyliion interview. If you guys haven't checked out our Hyliion videos, we have a 3-part series. Last part being released today. We already did the design and showcase. We did a test drive. Now we're going to be getting into the interview. That's going to be releasing at 4:30. I'm going to be doing a special on At the Close, probably driving us into that. So you guys stick around. I'll see you guys on At the Close. That's at 3:30. And let's go into live trading.